What is going on, traders? Welcome back to the Traveling Trader. Santa rally in full effect. The S&P 500 is currently up for the month of December over 5%. Larry Williams strikes again. Data's on point. 5 green days in a row. But what happens now? What are we expecting for 2022, especially being the year that we will likely see multiple interest rate hikes? Is the market going to crash? Well, if you're judging by YouTube thumbnails, then yes. I mean, it looks like the market is going to close its doors forever, never to be reopened. Is the market going to continue going up? What should you do with your stock portfolio? We'll get into all that in this video. If you get anything out of this video, leave it a big fat thumbs up. Leave it in the comment section below. Let me know what you think of the current state of the market and what's to come in 2022. And let's get right into it. So the stock market made a 69th, or let's just say the S&P 500 made a 69th all-time high this year. There was only one other year in history that was better than this, and that was 1995. Yes, you guessed it. This was around the time that the internet bubble was heating up. This makes it the 9th year in a row that we are seeing all-time highs. As you could see, the market routinely does this, where we see all-time highs followed by a crash where we stop making all-time highs for a few years, and then we're back to making all-time highs again. So with 7 years of all-time highs in a row, we are nearing historical precedents here. The only other time period that we hit more all-time highs in consecutive years was between 1989 and the year 2000. We hit 12 years in a row where we made at least one all-time high. Now, what's really crazy about these stats is what was going on in the background with the federal funds rate, the interest rate, right? The thing that Jerome Powell is going to be raising next year. Well, lucky for you, we have that data. So what's going to happen when Jerome Powell raises rates next year? Will we finally see a market crash? Well, looking at this data, between 1989 and 1994, there was a period of high inflation, high unemployment, etc. Not going to get into the domestic or geopolitical reasons as to why that is, but just know that that's there. In 1994 was when the Fed finally started raising rates again. So if we look at this history here, and I got this from an article in The Balance, if you look at this, the Fed started to raise rates in 1994. Unemployment had dropped and inflation had dropped, and to keep the economy healthy, the Fed started raising rates. Well, no surprise that in 1994, for this entire period here, that was the year where we saw the fewest all-time highs in the markets, aside from the year 2000, which was the start of the dot-com crash. So we'll take that out. But aside from that, 1994 was the year that we saw the fewest all-time highs in the market. So in my view, now this is very similar to the time period that we saw between 2013 and 2021. In 2015, the Fed started raising rates again. This was after the crash of 2008 financial crisis. The Fed didn't raise rates from 2008 all the way until 2015. Once the economy looked like it could stand up on its legs again, the Fed started raising rates in 2015. Lo and behold, no surprise there, in this period, this was the fewest all-time highs that we've seen in this entire period. And if we drill down even further, the month in 2015 that the Fed started raising rates, which was in December, the market started dropping, and we saw a 10% correction in the S&P 500. Now, at that time, they also committed to raising rates multiple times in the years following. However, Janet Yellen only raised the rate one time in 2016 and one time in 2017. That's it. So it's not set in stone when Jerome Powell said that they're going to raise rates 3 times in 2022. Anyway, more important than this is what the market did. After that initial rate hike in December of 2015, the market was able to digest future rate hikes very easily, and we didn't see a drop again thereafter until 2018. So based off of that information, that leads me to conclude that yes, 2022, we will likely see fewer all-time highs than we did in this whole period here from 2013 to 2022. And that initial rate hike, when it happens, Jerome Powell said that they won't start it until tapering is done. But that initial rate hike could cause a shockwave to the market, a mini shockwave to the market that could spur a 10% correction or more. Also, real quick, just from a technical perspective, we are seeing this major divergence. This is called bearish divergence between the price, the RSI, on the monthly chart. Same thing that we saw back in before the 2015 correction. So likely what I think will happen after December 2021 Santa rally is we'll go into January 2022 with a little trepidation. We'll be a little hesitant, bracing ourselves for what the Fed is going to do, the blow that the Fed will deliver to the markets with that first rate hike. Depending on how violently the market responds, it will really dictate the timing for future rate hikes, or if we will even see 3 rate hikes in 2022, or if they will scale that back and spread them out more into the following years. But I personally don't see an epic crash in the markets next year, especially because the economy continues to grow. However, I will definitely be keeping my eye out on the inflation story, because I'm not an economist, but I don't think that you can print over half of all US dollars in existence ever within the last year and really come out of that clean. I think that the chickens will come home to roost in some form or fashion. There will be some pocket of the economy that will actually feel the effects of that inflation. And I'm not talking about paying more for a Tesla or a PlayStation 5. I mean, really see the effects, the negative effects of that inflation. Kind of like we saw in 1979 and 1980 when inflation was double digits. The inflation was 11.3% in 79, 13.5% in 1980. So the Fed funds rate actually reached a high of 20% in 1981. Imagine a Fed funds rate of 20%. Imagine what savings accounts look like, actually. But imagine trying to buy a home in 1981 and what that mortgage looked like. So in summary, do I think we'll crash in 2022? No, I don't think we'll see a bear market. We could see a correction, which is just a buying opportunity in my view. But really, the story is going to remain on inflation, and that will dictate Fed policy. That will dictate the speed at which they raise rates, how many times they raise rates, and that will also dictate that partly the health of the economy. So if inflation gets really out of hand and we see a situation like we did in 1980, yes, I mean, the markets could fall into bear market territory. So keep an eye out on the inflation story. The Fed, by the way, is expecting inflation for 2022 to be under 3%. Hopefully that's the case and we don't get higher than we are currently, or even worse yet, into double-digit inflation. Because if we do, then just like we saw in the early 80s, the market could actually go into bear market territory at over a 20% drop. I believe the market dropped almost 25% in the early 80s period after they had raised rates to that 20% Fed funds rate. All right, so what should you do with your portfolio? Well, in my view, you stay the course, meaning you continue to accumulate quality stocks at discounts. If you see Apple at a 20% discount, if you see Microsoft, Nvidia, Home Depot, McDonald's, Chipotle, Shopify, continue to invest in quality stocks. Make sure that you are happy with your portfolio distribution. I think 2021 was the year of dissonance. What I mean by that is folks who invested in blue chips, i.e. boomer stocks, had a great 2021. Apple is up by 35% this year. The S&P 500, if you just bought an index fund, is up by 28% this year. If you look at Microsoft, it is up by 53.5% this year. McDonald's up 25%. Chipotle up 27%. However, if you had invested in DraftKings, you're down 40%. If you had invested in Fubo for 2021, you are down 42%. Skills, you are down 61%. Roku, you were down 30%. Zoom, 45%. Teladoc, you are down, and now I'm not just picking on Kathy, although I will be doing a video on her soon. Teladoc, you're down 54%. So I think that 2021 was really the year of sort of conflicting narratives where folks that invested in blue chips thought 2021 was a great year. But if you talk to people on the other side of the spectrum who had bought most of the hype stocks in 2020 and just held them because they were taught to diamond hand, then those people are hurting. And those are the people saying, what do you mean bull market? 2021 was a bear market year. No, it wasn't. The S&P 500 is up 30% for 2021. That is one of the best years historically. But the reason that I continue investing in quality stocks on the drops is because historically that has shown to be the best strategy, right? If you invested in the S&P 500, just go back as long as you want. Every time it hits the 100-day moving average or the 200-day moving average, and that's all you did. You did nothing else. You just took money from your paycheck and invested it in the indexes when they hit major moving averages. Then you would look back at your account at the compound gains and be like, holy shit, this is amazing. And also when markets crash, they tend to crash to a previous high that we saw just very recently. There is more lost on trying to time a crash than actually withstanding the crash itself, right? Because every time a market crashes, it crashes to a previous high that we saw not that long before. So here's what my portfolio looks like. For instance, you see Apple, NASDAQ, SPY, Microsoft, NVIDIA, Tesla, Amazon, AMD, XLK, which is the financial sector of the S&P 500. Those round off really the top 10. And I do have some speculative stuff here, but they make up a very, very tiny percentage of the pie for me. So if you want access to my portfolio, all the stocks that I'm investing in, how I trade. Also, we do obviously have options which allow you to leverage any single direction in the market. We just created a day trade watch list section for options where we release this every day, talking about which calls or which puts we're going to buy if the stock breaches a certain level for the day. So in this case, for instance, PayPal would be a 195 call if PayPal breaches 192.85, or 190 put if it falls below 191. If you're interested in all of this stuff, it is a great value. Link is in the description below. Would love to have you come join over 4,000 traders, be a part of the family. Anyway, traders, I hope you got something out of this. That is my thesis, I guess, for the upcoming year for 2022. Hit that thumbs up if you got anything out of this. If you have a question or comment, leave it in the comment section below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.